it's time for getting a management on board. Q4 numbers for Welspun Living were out some time back. Revenues were up 20%. EBITDA expanded 28%, and there was a 100 basis points expansion in margin. Bottom line was flattish. I'm guessing below the operating line would have a couple of one-offs might have been there maybe. But on the revenue and the operational metrics, you can't really complain. And I think that is the conversation that we're going to have with Ms. Dipali Goenka. She's MD and CEO of Welspun Living, joins us right now on the show. Ms. Goenka, good having you. Thanks for taking the time out. Neeraj here, good afternoon. How do you sum up the quarter for Welspun Living?
So, I think I would say it's a very interesting quarter in the terms of what we were looking at, and I think it actually sets the tone for whatever we are looking at in the terms of a growth of 15,000 crores by 2027. So I think we are absolutely there. If I look at, we are at $1.2 billion annually. 2,615, this quarter, where 33% was the emerging businesses, that is advanced textiles, flooring, and domestic consumer business. We all know that, because of the Red Sea, there was a little aberration in the terms of freight, and hence the flooring saw a little blip that we saw even in the advanced textile. Domestic consumer business has been a little slow anyway with the sentiments in India. We all know how that is panning out, but that is a blip, I would say that. So having said that, we definitely are very, very clear on what we are going to be achieving this year in the terms of our emerging businesses that contributed 33%. We look at it contributing around 45% to the top line by 2027, and that's what is something that we are very, very, very encouraged about. And this year as well, the growth will be around 10 to 12%, and bottom line of around 15.5%. I think, Neeraj, I heard about you talking about the profit, and that has been a little flattish. I think that I must want to clarify. I want to clarify that is owing to the merger and also the whole, the amalgamation and about the subsidiaries tax that we took on this year in 2024. So that rate cut that we took is around 30%. With next year again will be around 26 to 27%. So I wanted to just clarify on that. So everything in that perspective is also intact.
Fair call. Now, Pray, tell me, I heard you say that the India domestic business has been, the fact that it didn't strike too many chords was probably a blip. I was of the opinion that Indian growth numbers should hopefully work better in FY25. And globally, when I look as well, Ms. Goenka, PMI numbers across various geographies are starting to pick up. Do you see that early signs or those early signs in demand for your businesses as well, or will it take some time to come, or does it usually take some time to happen?
No, I think it runs absolutely the way that the world works. I think it's all about discretionary spends, and I think it works very, very closely with the other consumptions that we're talking about. So I think, Neeraj, to your point, you know that United States of America, we're talking about a GDP mobilizing at around 2%, which is a little slow. The Fed rates you saw, they are at around 5 they cut down, but the interest rates are around 5.4%. And the inflation got a little higher in March, around 3.4%. If you look at Europe and UK, the inflation got a little lower comparatively. Bank of England is watching it very, very closely. India, again, we know we are at inflation of around, around 4.5%. But I think the whole idea that I must tell you is that, the world is very, very dynamic at the moment. Some people are talking about USA in the terms of anticipation of recession. UK, Europe is uncertain. Middle East, again, which has a GDP of around 3.7% consolidated, but the uncertainties of war prevailing is kind of a concern. But I think, however, having said that, I think post-COVID, the world hasn't been normal as it is. It is all about how we look at our businesses. So while saying that, United States consumes the largest consumption expansion for home textiles. We feel very, very confident about United States of America and rest of the world. Also, as we continue to grow, our share of shelf, not only in the terms of private label, in the terms of our licensed brands, in the terms of our hospitality, different product categories that we're talking about, and different channels as well. So I think for us, we are completely clued on to that as well.
Okay. Is this 12.5%, 13% growth? I'm not quoting you verbatim, but something around that, predicated on the world growth looking stable, or is this baking in not necessarily the most buoyant demand globally, but still you being able to clock in about 12%?
Neeraj, to the latter, and I think in this world of cautious optimism, dynamism, I think that's what we are looking at. And however, this year we clocked a 20% growth this year. So we are absolutely geared up for the growth, but however, a commitment towards that cautiously optimism is something that will prevail, because the world is no longer that stable state, as we know. And we all know that 65 countries this year are going in for elections. So that's again something to be also looked at, apart from any black swan event that might just come in. But we are very, very clear on this growth, and 12% growth that we speaking about, our EBITDA of 15.5 and above. So yes, that's where we are. And we always continue to delight our stakeholders.
Ms. Goenka, a couple of things. So traditional businesses, newer businesses, it's a classic cocktail of a lot of things which could work. Where is it that you are most constructive on?
If you could clarify and articulate that further, Neeraj, that will be nice.
Okay, what I mean is that you have a line of business that you've gone on for years, then there are newer segments that you've introduced as well. You're probably going in newer geographies as well. When you look at the next 12 to 24 months, which of these segments are you more constructive on from a growth perspective?
So let me give you a complete global perspective here. And I think the world just look at the whole world map. Yeah, let me start with the United States of America. That's my, that is where we'll start off with. If I look at that part of the world, we are not only talking about the private labels in the terms of towel and sheets. Again, the fashion bedding, utility bedding, rugs, carpets, flooring we are talking about, the advanced textiles that we are talking about, hospitality that we are talking about, licensed brands that we are talking about, that we see will continue to grow, and we are looking at focusing on the share of shelf. Focus will also be on the discounters, because that's where we see the growth panning out in America as well. Now, when I talk about UK and Europe, the interesting thing, and I think I've shared that with you earlier as well, Neeraj, the licensed brands like what we acquire, what we are working with, with Disney in UK and Europe, I think is a huge opportunity to open up more doors in the terms of other parts of the countries like East Europe, like Poland and the others, apart from the other retailers that we're working with, like IKEA. And the Carrefours and the others as well. Having said that about UK and Europe, the rest of the world like Japan, New Zealand and Australia are very, very interesting geographies for us. That definitely is something that we already are working very, very closely with, not only in the terms of our home textiles, but also in flooring, and also the channels of hospitality as well. So yes, that's the way we are panning out. India, you already know, we have two brands, Spaces and Welspun. And also flooring as a category, which actually grew this quarter by 40%, and also owing to the hospitality and the institutions, kind of segment. We are looking at the residential. We tapped around 2,500 AIDs last year, and we'll continue to grow that. So yes, this is the way we look at panning out. So yes, the share of shelf is something that we're going to be talking about, apart from just not the channels, apart from but the product categories, but also the licensed brands, our brands. I must give you an insight. Our Well Home brand that we have, which we launched online, actually grew by 100%, this year offline as well. So yes, there's a very interesting mix that is emerging in the terms of licensed brands, our influencer brands like the Creative Collab, our own brand that is moving from online to offline. Christie, I mean, let me not forget that. That grew 21% last year, and this year, and they are, on the track to achieve £50 million by 2027. A very strong D2C brand, not only in UK but also in Middle East, also growing in US and New Zealand and etc. as well.
Okay. Well, Ms. Goenka, we wish you all the best for that. I presume all of this will happen without any kind of major fundraising happening. So all the best for that and more. And thank you for talking to us, more importantly, today.
Thank you, Neeraj. Thank you.